this after its marine systems unit lost that $40 billion contract to build 12 submarines for the Australian government. As Dan was talking about, the project was awarded to the French firm DCNS, third of which is owned by Carlin. Australia's Prime Minister called the decision a, quote, momentous national endeavour. Now, elsewhere, some of the other big stories today. BP shares catching a bid after first quarter underlying replacement cost profit. The metrics similar to net income hit $532 million. It's a huge beat on analyst expectations for a loss of $130 million. The company's CEO, Bob Dudley, expects global oil supply and demand to balance by year-end. And we're going to be talking more about these earnings later on in the show, so we will come back to that. But for now, Standard Chartered is due to issue a first quarter trading update today. That's at 11:15 CET. This is the British bank grapples with macro headwinds in its key markets and commodity exposure on its balance sheet. So what can we expect? Paul Kavanagh, Chief Executive at Petronas Partners, joins us now. Paul, good morning. Great to have you on the show. So what are you expecting here? Because it's a transition, it's a restructuring story, and that's ongoing. It
certainly is. Well, you may recall at the end of 2015, new CEO Bill Winters came in, a very high-powered ex-JP Morgan banker, with a task. It really was to restructure Standard Chartered. Standard Chartered were exposed to many of the emerging economies. They had many non-performing loans. They're exposed to commodities, to the oil markets, and of course commodities had a tough year last year. And he came in, he's raised $5 billion under a rights issue. That certainly has put the company into a strong capital position. But the key thing, and this is what we've got to look out for today, is that of the $300 billion of risk-weighted assets, the feeling is that about a third of those are either non-performing or indeed underperforming. And the real task for him today is restructure that and start to deliver some sort of solid platform for Standard Chartered going forward.
What message can he send to investors today that says, look, we're going to get this under control, we're going to be tackling this, and how long it's going to take?
Well, Bill Winters has a good job on his hands today. The first thing to say is that he was very well accepted into the role as CEO, and since then the share price has performed very strongly against the banking sector. It's up around 60% relative value, and that really reflects the combination of his involvement with the business, but more importantly, it's just been a more prosperous sign in the last 3 months for the commodities market. They have certainly turned, the emerging markets have turned, and really Standard Chartered being a highly leveraged play on those two particular bets has made it one of the top performing loans. The stock was down yesterday. There was a little bit of profit taken ahead of these results, but for Bill Winters, really the key message here is that he's on top of the restructuring game.
What about for Core Tier 1 as well? I mean, they've indicated between 12 and 13%.